Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's June 9th. This will be our chart lesson for the day. And just a quick look at our daily chart. Another real low volume range type day. Prices didn't really go anywhere today. They did close near the high, but it was just a range type day overall. So you can see here, we did close higher as well. We closed higher than we did on Friday. But I would still, you can see it's just a little small doji there. That's the daily bar, and that's pretty much when we flip over the chart, you can see that's just kind of what it looked like. We did trade higher, we did close higher, but it was just kind of a range day. So there it is on the daily chart. Let's flip over to the 2,000 tick chart, and we'll take a look at it there, and we'll go through the trades. And you can see it here. We did. It does look like we had a spike and channel up and then sold off later, but really I think the major pattern was this sideways range, and we broke out up here and just went into a tighter range before we sold back off and uh, turned back down into the main range. So you could have played this either way. You had the resistance here, but you also had the support here at an angle. And so you really needed to see both of these to get a good play on this. If you just played your short-term stuff, it probably kept you in the game. But it helped if you had this trend line working up through here. Um, and you can see where we were turning back down at the highs up here on the upper side. And you can see the midline coming into play, so it tells me pretty much this is accurate here. So uh, there it is. That's how I saw it today anyway. But let's zoom in here. There's a handful of trades here. Most of the trades were early, and there were a couple of late in the afternoon, but there just wasn't a lot going on today. It's kind of a quiet, low volume day today. But 7 o'clock came right in here. We had this spike, or we had this channel up with a close outside new high, and then we were kind of working back down in this other channel. There's a shorter term one within this larger term one, and then this is mostly sideways. But you can still see that we're working lower here. You can see prices working down, making lower highs. So you really want to draw that trend line, that secondary trend channel in there as well. Um, you didn't have to have that, but it helps. It definitely helps on this trade here as well. Um, but there really wasn't much you could do here early. 7 o'clock, I think, came on maybe this bar right here. Maybe it was this one. Yep, it came on the red bearish bar here. Um, we had a lower high here, but I don't think the signal bar is good enough. Another couple of lower highs, but they're all just first entries, and we're really just kind of working sideways there. You can see it working down that trend channel. This was just a first entry. I don't think you can go short there either. But finally, we had two legs back, a second entry right off this key entry point. Um, you might have had a little bit of concern about this channel working up, but I think this is your bigger pattern, and we are in a range. So I like going short right there. As long as you got room to scalp out before you get back down here to the lows, I think you're safe to take that one because you see it does bounce there. But you would have been out of that without any problem. Now this one, when we get outside and we're still uh, prices are still reacting to that trend line, I think you got to sit tight at that point and wait on a break and then a move to a new high. And then we do get a lower high there, but that signal bar is no good. But we get another lower high. There's still room to get out there, so I like that one. It's just we got a triple test and a little lower high right there with a nice signal bar. And the key is we still got plenty of room to get out. I didn't mark this long here. You might take that trade, but it made a much lower low. It does close back inside, but there's just not a lot of information to say for sure that this lower point is correct. It could be way up here, and that might just be a failed breakout, which after the fact, it's what it looks like to me now. At the time, I was playing it more down here with only one breakout, and maybe that's still correct. Um, But I just think I think you got to wait on a higher low here instead of taking that entry. You might enter there. Be willing to give it a green because that could be correct there too. I actually played it down here because there's the close right there. But I don't know which one of those. It's hard to say which one of those is correct. Either way, you still close back inside. The problem is if it's up here, you're closing outside of it. Um, but if you're playing it up here, you probably wouldn't take that short right there either. So it's just hard to say. But that's how I played it earlier. And so maybe you take that trade. I left it blank because it's just not a sure thing. And you can see prices just don't really know what they're doing here before they finally. Notice how we're just kind of stuck going sideways before prices finally take off. There, you do get the little two legs back here, but looks a lot mostly sideways, congested. There's not much room to the highs. I just don't think you can go long there. But we do get a close outside this channel. Move two legs to a new high, and then we get a lower high right there with a nice signal bar, still way away from the EMA. I like entering there. Here you might say, okay, we had a reversal pattern too at the highs of a possible range day, and it broke higher first and failed and turned down. So you might enter that on the engulfing bar. I didn't mark it. It's not perfect, but maybe you enter that. Most of you have heard me say, if you're not a consistently profitable trader every day, you shouldn't be trading engulfing bars at all. Just leave them alone, and you'll be better off. But if you understand what's going on there, maybe you take that trade. And then you can see we bounce here, but that's the first close outside, so I don't think you want to go long right there yet. It's just the first entry. Now we do get a close outside new high here. We get that little failure that turns up and turns down. So it's tempting to go short there, especially since it closes through the EMA. Again, I didn't mark it. It looks a little congested and sideways. And we did just come off possible lows. But it's another one you might argue that, hey, that should be at least green. I mean, it's tempting to take that, but I didn't like it because of all that sideways congestion and the fact that you got a couple of dojis in there, a couple of bars with no bodies. Anytime you get three or more bars stacked side by side and at least one of them has no body or a very tiny body, then that's congestion. It's not ideal, but there's some reasons to consider it. Just the congestion is what throws me off. And there's no rule that says you can't enter out of congestion, but basically what congestion is, it's like a range. And when prices break out, they fail and they snap back. And you can see it snap back here. It does keep going lower and it doesn't stop you out. But sometimes you can get stopped out. It depends on how tight it is and what the situation is. So it's tricky to play it. It really is. So just be careful in congestion. We're working back down. What we're really doing is we're looking to make a new low on this channel here because that's the first break. I went ahead and drew the other channel here, but we get a close outside and a new low on it. And we also make a new low on this one. And we get a nice signal bar right off that trend line. I like going long there. And you can see that turns out to be a pretty nice move up. Close outside, new high. Again, I don't think you want to go short right there. That's like a third entry or something. I think you need a lower high here, and you just don't get a setup for that. And then the next thing you know, you're working sideways here, and you get a 1, 2, 3 triple test with a nice signal bar. That is also a first entry, second entry. So I like going long there. And we did just come off the lows here again. So there's a good chance we could eventually go higher because we've tested. You can see how many times we bounced off that trend line. And so I like going long there. You can't go long on this one because it's right into the resistance. Turns out it doesn't matter, but you don't know that in advance. And this time we push right on through the resistance up here on the highs of the range. And we eventually we run into the upper side of this two-tiered channel and we turn down. You're still in this uptrend, so you can't go short up there. You get a lower high here, but again, no setup. So it's really two legs back there. Notice you get a break and new low, and it's 2 legs back. But there's no setup there for a signal bar, so you can't go long. And then you get back in the range here, and you get a nice signal bar. And there's a hidden second entry there. Notice the U high right there, and you get a first entry. We'll burn down to get a second entry. If you went to a smaller chart, you'd see probably 2 legs back there. So maybe you take that one. It's not ideal. I did mark it green. We run back up here to the highs, and you actually get a close outside here and a couple of swings up to a new high. We do close back inside there, but it's questionable. Maybe you take that one, maybe you don't. It is a second entry short too, so it's 2 legs. Actually, I take that back. It ticks lower right there, so that would be a third entry short. So that's why I think you really need to wait on a lower high just to make sure we're reversing this time. And you get that right there. That's a pretty good signal bar, so I like going short there. Unfortunately, you don't get anything but a scalp out of it. It comes back again, and there's a second entry short here, but the signal bar is no good. And then we break out down here. Now, you might argue for that to be green. The only reason I don't like it is because you're still in this down channel, and it closes inside it, and it closes outside the range. So I don't think it's dangerous to go long there. If you get a high or low, maybe, but you don't get that. You just get 2 legs up and another second entry, and by this time you get a triple test across there. And this is a really bearish bar, so I like a really strong signal bar. So I like going short right there. That turns out to be a really nice move. And that takes you down and into 230. So, yeah, just wasn't much going on today. Very low volume. Very little movement. It was mostly uphill until about a little after 2 o'clock, and it was downhill from there. And we're just coming back into the range, in my opinion. I think this is just a failed break out of the range. It turns back in like usual. And it does look like there's a little bit of a spiking channel up there. Again, you can still see the resistance occurring across here. Notice how we didn't get to the highs there. It was the next swing before we broke out. And then we quickly come back again. And then we're just chopping sideways before we turn back down into the range. So just a mostly sideways range day with low volume today. So not much you can say about it. Not many trades. Looks like there's 1, 2, 3, 4, 5, 6, 7, and that's plenty. Don't get me wrong. The problem is you got to be patient, you got to be disciplined, and you got to wait on them. And they're not necessarily the easiest ones to spot always. So most of them are playing the range rules. It's not like it's a clear, strong trend with second entries all the way up to a key entry point or anything, or down a key entry point, which that tends to make it a little easier trading. So this is, it's hard to sit still for hours, for long periods of time and wait on a trade. The average trader has a really hard time doing that. But that's where you got to get to be a consistently profitable trader. You got to have that discipline, and you got to have a lot of patience, especially on a day like this where it's really mixed and really sideways choppy trading. Because even in the trend here up, it's sideways and choppy almost all day. And prices are reversing up, then reversing down, then reversing back up, and it's just not an easy day to trade. These are not easy days to trade for average traders, and especially people that are learning to read a chart and learning price action. So if you struggled, don't beat yourself up. It's just the way it is on days like this until you get more experience, and a lot more experience, I should say. So anyway, I'm not going to beat around the bush. I'm going to wrap it up and get out of here for the day. I hope you had a good trading day. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.